Hello and welcome to FinTech Diary. Every week we speak to an industry expert who's part of the FinTech revolution. In the world of FinTechs, which is based on constant evolution and innovation, we question changemakers on how they plan ahead and read the future developments. In every chapter of the FinTech Diary, we get the breadth and depth of every segment related to FinTech. My name is Amol Dete, and my guest for this chapter is Vasanth Kamath, founder and CEO of Smallcase. Vasanth, glad to have you.
Hi, Amol. Great to be here. Thanks for having us.
So, Vasanth, to begin with, I have a very basic and the first question, to all the speakers whom I interview in FinTech Diary. And the question is, give us some, illustrations in terms of the numbers that Smallcase has specifically in terms of how many investors do you have, how many customers do you have, how many employees do you have? I think you started in 2015. What kind of percentage in terms of growth have you seen? So give us some sense on that front.
Sure, Amol. Maybe I'll just introduce what Smallcase does for whoever's watching, so that some of the metrics or the numbers that I mentioned have some context to it. But at Smallcase, we're building a portfolio-based investment platform where each portfolio, or Smallcase as we call it, is a professionally managed basket of either stocks, ETFs, or exchange traded funds, or real estate investment trusts, right? And these are weighted in a manner to reflect a specific idea, theme, strategy, or objective.
Right.
Globally, this concept is called direct indexing, is being offered by some of the largest brokers, asset managers to their own clients, either directly or via some partners. But in India, how we've done this is in a very novel and innovative way, where we enable the entire industry to offer these products or small cases on our same platform. So we've taken like an ecosystem approach to this. We work with 350 capital market players, all of them who are regulated and who offer this in different capacities. Like they're either creating small cases as a manufacturer, they're distributing small cases, or as a broker, they're enabling the transaction. So that's one bit of how our model works. We work with multiple industry players. That number today is 350. I think maybe 2-3 years back, this number used to be in the double digits, early double digits, like somewhere between 10 to 15. So that's been a lot of growth for us. At the same time, on the investor side, today we have 65 lakh retail investors on our platform. They're investing or transacting 25,000 crores a year. So that's the scale we've been able to reach to. And in the last 2 years, I think we've basically 12x this number. Obviously, the last 2 years have been great for the industry, where a lot of new investors opened up demat accounts, mutual fund folios, allocated more to equities in general. So we've enjoyed that trend as well. From a team perspective, we are a 350 strong team. Currently working remotely. We have a 90% remote policy, and of the 350 strong, more than 60% are in the product and engineering functions. So very, very tech focused company.
Okay, noted your points, and good to have that introduction, Vasanth, to begin with. Tell me something about the growth in terms of the investor numbers. On a YOY basis, what kinds of growth have you seen specifically in adding investors, and more importantly, what kind of value these investors are adding? Is it that when you add more customers or investors on your profile, you are managed to sell them maybe more products and maybe make more profits or something like that? How do you translate these numbers?
Sure. So from an investor number perspective, like I mentioned, so right now we're at 65 lakhs. 2 years back, this like early 2020, this number was under 5 lakhs. So that's how we've grown in terms of the investor base on the platform. I think in terms of who these investors are or why they're coming to small cases, there are primarily like two types. One is people who are just starting to invest into direct equities or stocks, right? Basically, they want to start investing. Obviously, the world of stocks is overwhelming to a lot of people who are doing it for the first time. They have to understand, what a company does, what its financials look like, what the management quality is, how other analysts or brokers are looking at it. They have to do a lot of research in order to build their portfolio. And that's the first type of investor who comes to something like a small case, because you get, simple to understand ideas which are portfolios by themselves. So, it's easier, it's healthier, and makes it, a very transparent way to start your direct equity investing journey. The other type of investors are those who've been investing for some time. They've either built their own portfolios, they have their core portfolios in mutual funds, etc. But now that in the Indian public markets, the depth is increasing. Like we saw, a slew of IPOs coming about in the last couple of years, and these are coming from a very different sector industry that the Indian markets are generally have not seen. So there's a lot more depth you need to kind of invest into that. You need more coverage, you need more exposures, you need more ideas, you need more strategies. So that's the other type of investor who's basically looking to kind of add some of these interesting strategies or exposures to their portfolio while they have their core portfolio already built. So that's kind of one of the two reasons why people come to the Smallcase platform.
Can you also quickly explain me, what is the major reason, that the people came, your numbers specifically skyrocketed to 65 lakh in just last 2 years, Is it because of the pandemic when people had lots of times and they started buying stocks and maybe, moved towards the stock market? Is that the reason, or there are other reasons?
2-3 reasons. One was, more company led in the sense that while we launched in 2016, like I told you, kind of, for our concept to really thrive, you need more and more ecosystem players to be part of this, right? So for which we've been building, the pipes, laying down the plumbing over the first 4 years. So from 2016 to 20, honestly, it was very coincidental that, in 2020, we got to this size of ecosystem or partners who were offering small cases. But the first 4 years primarily went into, laying down the pipes to enable this. So we very fortunately were there at the right time to kind of capture this interest. In terms of, what's changed in the industry over the last 2 years, one is definitely because of the pandemic, people's behavior or, how they transact has gone from a call-led model. They used to call and trade earlier. They used to visit a branch. That's moved digitally. And obviously, both digital as well as offline or assisted workflows existed before, but those were, more skewed towards the non-digital modes of trading, which has now skewed more and more towards digital, right? So that obviously helps a platform like ours, which is completely digital. The other thing also is, I don't know whether it's, more time or whether, there's more content out there because of which people kind of started getting more educated about how they should look at their savings, their investing. But a lot of people started allocating towards equities. Obviously, as an industry, equities or savings is super underpenetrated in India. So that's started kind of changing, and coincidentally that happened over the last 2 years. It's a mix of all these reasons that we saw these this kind of a scale of growth in the last couple of years.
Okay, sure. Noted your points, Vasanth, quite meaningful. And yes, the equity penetration is very less. And that's where my another question comes, which is again very important. So at one side, we have been talking about the low penetration specifically in the market and how FIIs, will mint money here by investing in the Indian stock market. But considering, this is a very traditionally dominated segment, it has its own, conservative approach. That is one. And second is, it's not, the sector which understands a lot of people. Maybe there are different reasons. It's very technical. So how has been the market has been changing according to you? Do you see that, the people are going ahead of whatever the traditional barriers they used to have earlier?
No, for sure. Like a lot of reasons, still most of them in their infancy, but I think, things are actually starting to accelerate, and this has happened over the last 5 years itself. But for example, one is, just literacy in terms of how people understand what to do with their money, not just investing, right? Be it protection cover, insurance, be it, say credit, how to look at their liabilities, or what we're talking about, which is the asset side. What should your portfolio look like? Which asset classes should you kind of allocate to? Literacy or education around that has kind of grown. This is again thanks to a lot of content now being created around personal finance. People more open to sharing their insights, their learnings, their own experiences. So that's one reason that's happened. And I think the other thing is obviously digitization. I'm sure you would also relate to this, but like say 5, 6 years back, while things started becoming more and more, say, internet first, mobile first, etc., transacting digitally was still a big barrier, right? As in, people wouldn't necessarily want to do large ticket transactions. As in, it was more around the fact that they would consume information on the internet, but when it comes to transactions, not everybody was very comfortable. But again, that's changed massively. As in today, be it from a discovery perspective of anything, the first place that most people look up is online. As in, if you don't have an online presence, that's a negative today, versus earlier, if you didn't have a physical presence, that was a negative. Today, more people have adopted financial transactions online in like a huge way, right? Be it across payments, be it across any investment transaction, be it receiving credit. Like, a lot of the financial transactions are increasingly becoming more digital. Obviously, that kind of helps foster new experiences altogether as well. So I think these two have been the biggest changes for how the Indian consumer has started changing how they behave with their own money.
So I wanted to add more here in terms of the fintechs. Obviously, this difference is made because of the innovation that the fintechs have created, but I want your version of it, or maybe I want you to put it in your own words. So what is the actual difference that the fintechs have made? Because till now, there were a lot of challenges. Buying stocks were still, I mean, the demand is there. It was still the brokers and everything, but still there were a lot of challenges. People, never liked the dashboard which the desktop has. And here the Zerodha and the other companies came with a very, user-friendly UI and UX, where you can simply buy the stock just like that with a minimal, whatever minimum rupees that you have, right? So what is the major difference that the fintechs have made, which the traditional brokers or even the security companies could not make?
No, sure. So I don't think it's just, the fact that things have come online, because like in India, 2000 was when the first internet broker actually launched, be it ICICI Direct, or just after that, even Sharekhan launched. So the concept of placing trades electronically in India existed since 2000, right? I think what I was referring to previously also was that a lot of people have now come online. Again, the smartphone or mobile phones becoming, an everyday device for usage has obviously aided that, as in that wasn't true like 5 years back, right? And also people being open to transact these things online. Like, I'm just giving an example. My dad, for example, invests in the markets. He was not comfortable placing an order through his phone till he had to, as in he used to either call up his broker dealer, or he used to visit the branch and place the order, just because there was that familiarity, there was that comfort that he used to get. But once the pandemic happened, he couldn't do either of those two, because people couldn't visit their offices and hence couldn't take a call and trade, or there was no branches open. So he had to necessarily move. And the openness to kind of, one, transact, and second, once people experience that, you're locked in forever. It's not like you want to move back to this because of a variety of reasons. So I think these two definitely help. But coming to like what the industry has kind of also done over here, it's not just in the whole experience or the UI UX, which is front facing the user, right? There's been a lot of work, a lot of effort, a lot of innovation that's happened behind the scenes. And that's where the entire industry, be it from the regulator to the infrastructure providers over here, really had to kind of up their game over the last few years to kind of enable this whole experience being online. Like, I think 4 years back when we had started, I think the first year after we started, like, a lot of people wanted to try out the Smallcase concept. And because this is something easy for someone who's starting to invest to understand, or hasn't invested before to understand, right? Like, you have an idea, you have a stock basket to that, you just it's professionally managed, you go and invest into that. But when people had to open an account for this, that was a cumbersome process. As in, it used to take at minimum 7 days. There was a paperwork required where you had to sign at least 40 times and then courier that, and only then your account would get opened. Now, fast forward to today, you can open a trading and demat account in 15 minutes. So it's not just the UI UX of placing the trades that's changed. It's been the same that it has been in 2000. But I think things surrounding that, right, from onboarding, account creation, the whole India stack coming into place, UPI, Aadhaar, all of those has really supported kind of faster onboarding, people being able to trade within hours of wanting to kind of start that action itself. And at the same time, kind of, with digitization, more content out there, more literacy, more risk tolerance, all of that have definitely aided it.
No, sure, Vasanth. I think I understood your version of how the market has changed in the last couple of years, how the technology has built the whole platform so that people could operate seamlessly. Let me come to you with some specific questions now. Considering the large numbers that are there with the small case, I want to also learn from you what kinds of investments, return on investments, the investors have made maybe in last 1 or 2 years. Have you looked at that data, or maybe would you like to share those numbers?
So it depends upon small case to small case, user to user, as in there are multiple products and different users. But like, for example, if I look at our overall asset number, right, as in, and compare it to like the current asset value of all the investments and compare it to how much actually people invested, the difference between that is what the appreciation is. So that's around 18 to 20%. Obviously, it's a very oversimplified number because I'm just taking the current minus the total net inflows. For different investors, it would range differently based on the time that they've invested in, but that 20% appreciation is across the platform for people who invested in small cases.
Also, I want to understand, Vasanth, because most of the portals or the platforms which are offering these services are giving huge numbers that I have maybe millions of subscribers, or maybe 2 million people are coming on the website regularly. How many of them, specifically for you, Vasanth, how many of the 65 lakh investors or the customers that you have, how many of them are actually active customers and actually, make reasonable investments?
Sure. So it's always a time frame, right? As in when people come in for the first time, there's always a different, like I said, there are two types of customers. One set of customer is someone who's basically just starting out. That's where, they take their steps, or their baby steps are super small. They start investing like in the sub-1,000 range. That's their first investment. Once they get comfortable with both, how direct equity works, how the markets work, how the small case platform works, that's when they keep increasing that. On the other side, you have, say, the investors who are already experienced. They've, seen how the equity markets work. Now they're starting to kind of add more satellite exposures to their portfolio. They're, diversifying their portfolio more with small cases. So there, the minimum investment amounts that they have range around the 30 to 40,000. From, say, an activity perspective, again, this is something that we didn't know when we started, given it's a completely new product class that we've created, or a new concept that we've created. In early days, there was maybe a 20-25% usage of the platform, like, a trading platform, because we had also launched with a broker that had primarily traders on their platform. That was our first broker partner. So that was kind of the usage pattern. Today, that's completely flipped to, kind of long-term investing, where people buy, hold, and SIP into their small cases. So from an activity perspective, like in 12 to 24 months, like 90 to 95% of all investors continue to stay active on the platform. Like only the rest are basically, not stayed active. They're not investing in small cases anymore. So very high retention that way again.
So the reason why people come on the small case or many other portals, is to make money, right? They want to make money and generate some wealth. Are you making money, Vasanth? And are you profitable? That is what I mean by that.
Sure. So from day one, like, monetization has been inherent to our model, as in the sense that for every order that's placed, now we've also started monetizing in different other ways as well. But right from day one, since the first order was placed, we've been monetizing. So we have been making money, not yet profitable though, as in that's something that we want to do in the next couple of years. But the reason behind that is just that we've been investing into building more capacity. Like over the last 2 years, like for example, we launched, the small case publisher platform, which enables any licensed or registered professional to create their own small cases. We launched the small case gateway, which is like, a broking gateway or a UPI equivalent for stocks, ETFs. Over the last 2 years itself, we launched our own app for the first time. Before that, it was always available on a broker's environment. So we've been basically, creating and building this ecosystem that takes a lot of investment into the infrastructure and the platform side of it. So that's where we've been focused. But right now, I think it's more incremental. So profitability is something that we want to hit in the next couple of years.
But will it be months or years for you to reach to that profitable level?
Couple of years is how we modeled it out.
Okay. One more interesting question I have for you, Vasanth, and it would be really great if you could, give us an answer there. Considering a lot of portals are offering gigantic returns, recently SEBI chairperson, made a very strong comment. She said that a lot of fintechs, specifically operating in this space, are offering, luring the investors by telling them that you can earn so much money, but they do not have any business model and any anecdotes or maybe analogy to tell us how actually they can make investors can make so much returns. And most of these fintechs are actually building their business model on the anonymity. So considering most of the fintechs are not being regulated, do you see that there are ways where fintechs are trying to actually take a benefit of maybe UI, UX, and the growing generation of like millennial and Gen Z, and telling them that look, with mobile phone or simple application, you can earn so much money? How do you look at this whole debate?
Not really a debate, Amol. Like, I think, there are these set of platforms that one are obviously not regulated or are operating in the unregulated area, which kind of, and they're providing services which are not audited, which cannot be audited in the first place. Like the creators are anonymous. You don't know who is creating a certain algo strategy, for example. I'm guessing you're referring to that itself, the kind of algo platforms that are available out there. There's no authenticity around who's creating it. There's no authenticity around what the algorithm is. They show a backtested number. You can't again verify whether that's genuine or not. And once you invest is only how you get to know, right? So completely agree with how say the regulators also looking at that. I think they put out circular on how some of this should happen, but like it's very different on our side, as in I think we've gone the ahead and beyond to kind of ensure that what you see on a platform is in no way kind of predicting something or forecasting any returns. It's historical returns that you see. It's only audited returns that have been on the platform. There's no backtesting whatsoever. For example, say if you are a registered investment advisor, you come onto Smallcase, create your Smallcase. If you say that your strategy has performed X% in the last 2 years, that's not something that comes on the platform. Today you go live, from tomorrow it's where your returns are calculated by the platform. Everything is done on a platform level, so that there's no chance of kind of anybody misreading or misinterpreting some of this. Like we have actually gone like I think we are currently on version 6, but we've been launching transparency updates like every few months and weeks on the Smallcase platform, where right from understanding how say your costs, how you incur costs when you invest in a Smallcase, based on how much you invest. There's a cost calculator out there. If you want to download the constituents of a Smallcase historically, since it was live on the platform, as well as kind of verify the returns, we give you all the downloadable index series, the constituents, the rebalances, all of that, so that you can actually verify by yourself. Full disclosures. This is something that we're very, very particular about as a platform, and we're onboarding our manager partners, as well as as they service their own clients on the platform, like how they should operate. We've actually gone above and beyond what's regulatory required. So I think it makes sense completely that we have to abide by a higher standard of compliance, a higher standard of transparency over here, and that's something that will put platforms who are doing that in good stead for the future, because that's what builds trust and credibility.
Sure, Vasanth, noted your point. So, lastly, then again, I will come back to you specifically in terms of what are your future plans. Again, you partly mentioned that, in a couple of months you would like to go become profitable, but, what are your long-term plans? Will you go for an IPO or will you go for a fundraise? Because ultimately, you will have to, I'm sure you will have plans to, scale up your teams, maybe expand aggressively. So could you just share those plans?
Right now, I'm not looking at either of those two options, IPO or say a fundraise, as in very well capitalized, working on a lot of new projects though. I think the feedback that we've gotten and how users are reacting is that they, love the Smallcase concept and format. They want to allocate more of their portfolio to it. Like today, the Indian retail investor is not just starting out with one asset class and sticking to it, right? They're risk tolerance has grown, their risk appetite has grown, their horizons have grown. Hence, the openness to try out new assets is at an all-time high, right? So that's where we are working on ways to kind of provide those exposures. For example, say something we want to do is have more asset classes in small cases. Today, it's Indian stocks. We launched ETFs, like I think in 2018, we launched real estate investment trusts inside the small case construct a couple of years back. We want to add more and more to it, be it global equities, be it mutual funds, be it bonds, so that combinations of all of this can result into interesting strategies for users to add to their portfolio. We want to introduce more features that help customers take a more self-directed approach, at the same time a more healthier approach towards constructing their entire portfolio. I think something else that's on our radar and we've been exploring for the last couple of years is what should be our play on the global side of things. As in, like I said, in India we've taken a very different approach to how this is panned out globally, and that means there are opportunities for this model or the stack that we built in India to be replicated in other markets, be it developed or emerging. There's a lot of action happening around the space in the direct indexing industry. So, but honestly, like just the growth potential in India, the increasing savviness of the Indian investors, keeping our hands full on serving them better.
Sure, Vasanth, and that comes to my last question, and you kind of give me a hint on by talking about growth potential. So my immediate question is specifically about the India's fintech market right now, which has raised its flag all over the world. But currently, we have been seeing a lot of hiccups in terms of one, we got a bad response to the listed entities, those who are fintechs in the stock market. Investors are not being as aggressive as they were earlier. It's not that they're not investing, but they're scrutinizing more, going for more due diligence. That is what the current situation of the investments is. But obviously, the number of fintechs are rising. The interest from all over the world in the fintechs, Indian fintechs, is really high. Considering all this, what is your view on specifically India's fintech ecosystem? How far do you think that India's fintech ecosystem can evolve?
Sure, Amol. I think say if you look at financial services as an industry or a sector on the listed universe itself, right? The free float market cap would be north of $400 billion. And like outside maybe banking, which has kind of, seen a lot of people actually come on, but like we spoke about, every other financial service, be it credit, insurance, savings, equities, is severely underpenetrated. So there's a lot of headroom, a lot of potential for financial services as a category and industry to flourish. Right? So where fintech really lies, like every financial services company is obviously embracing technology to kind of, for multiple reasons, but it's not like there is a huge divergence between a financial services company and a fintech company. Like the convergence is only increasing over time. But like what are fintechs helping in? One, I think like there are three types of fintechs now. I think that's become more and more clear as the number of fintechs continue to grow. One is those who are making existing processes, existing service delivery models more efficient through technology. The other one is looking at financial inclusion or expanding many of these markets with completely new products, completely new solutions that kind of cater to a new segment of clients as well. And the third one, like we fall into that category, but where we are creating new categories itself by innovating on the product or the platform layer, right? So I think within these three types, how it's like all of them have been painted with the same brush earlier. That's how Capital also used to look at any fintech model, saying that it was easy to, or not easy, it was the thumb rule was basically compare among these three different models with the same metrics, see if you could they would compare between these three models with the same lens, right? But I think that's what's changing right now, as in we have seen basically this whole digitization technology coming in. This servicing costs have lowered. This is a global trend happening in India, happening faster than ever, where margins, yields are getting compressed. So either you have to operate at scale as a fintech, and so the bar for that increases when capital is looking at you, evaluating you. You look at whether there's a very high degree of confidence that you can actually operate at scale to sustain, say, these low margins, or your unit economics are right from day one. Monetization is inherent to your model, and whether this concept will become bigger over time. So I think there's just more understanding around what are the models or what are the types of fintechs that will actually succeed or win in the future, and hence it's a good thing, rightly so. I think that's where more due diligence, more time is being taken to kind of take some of these bets.
Right, Vasanth, noted your points. Meaningful one. I think it was really insightful, to understand, in fact, how you look at the fintech ecosystem and how a different model has been built here. Honestly, I have been interviewing a lot of fintechs, but most of them actually are working in a very what you can say, limited areas like payments and credit. Again, they have an unlimited scope. So it was really nice for you to share all the information specifically about the security market and how the trends of investments and investors are changing over there. So thank you so much, Vasanth, for all those meaningful insights.
Thanks, Amol. Been a pleasure.
That's a wrap, ladies and gentlemen. Click on the FinTech Diary tab to view our previous episodes as well. If you like it, please don't forget to share it on social media. Also, please ensure you're subscribed to our daily newsletter, which is absolutely for free. Thank you so much for watching etbfsi.com.